There's a saying about inflation: people invest in stocks and cryptos. I'm adding the crypto bit. Original saying isn't about cryptos for two opposite reasons. A, in hope and confidence in the future of an enterprise or an asset, and B, in fear that the value of their capital will be lost through inflation. Therefore, as a result of inflation reaching new heights, people are drawn to anything that might serve as a hedge against inflation. Despite the fact that there are evidence to the contrary, Bitcoin is seeing inflation as we speak. And in my opinion, it is doing really good. Therefore, Bitcoin is frequently seen as an asset that is immune to inflation. But how can I even say that Bitcoin is doing good during inflation? Before I even answer this question, let's see what is the most popular, most recognized definition of hedge against inflation. Investopedia defines it as an investment that is considered to protect the decreased purchasing power of a currency that results from the loss of its value due to rising prices, either macroeconomically or due to inflation. So if you believe in this hypothesis that USD is and will continue to devalue long-term, excessive money printing, etc., and Bitcoin would appreciate in its value, which it already did multiple times in the history, due to its scarcity attributes, then Bitcoin as an asset class will protect the decreased purchasing power of a currency that results from the loss of its value due to rising prices, either macroeconomically or due to inflation. Nevertheless, I'm not suggesting that cryptocurrencies are not immune to the effects of inflation, but because of their inflationary nature, that is limited supply, their prices are more affected by changes in the amount of traditional currencies. Now, some cryptocurrencies like Bitcoin and Ethereum have tried to stop inflation by putting limits on how many can be mined, but this has turned out to be very hard, especially given the state of the world economy. In addition, supporters of cryptocurrencies typically promote the asset class of cryptos as a category of assets that is uncorrelated with assets that are based in the actual world. Now, when you take into account, however, that each cryptocurrency is distinct and that some of them are developed with the goal of creating inflation, the situation quickly becomes even more complicated. So you see, investors and markets still care a lot about inflation and continue to look out for assets that maybe hedge against inflation. Of course, only time can tell. My argument is always the same, in the same context. If not Bitcoin, then what other choices do we have? After setting up the context of this video, I aim to answer these three questions. Number one, what Fed is doing about inflation, or maybe what Fed believes to be doing anything about inflation. Number two, what are the three possible scenarios we can expect post 27-28 of July following FOMC meeting? And number three, how would crypto market react to all these three possible outcomes of FOMC meeting due in 2 weeks or so from today? But before we get started, please hit that like button and turn on your notification bells so that each time I upload a video, YouTube notifies you and you do not miss out on my content. If you haven't already, please help me inflate my number of subscribers by subscribing to my YouTube channel that brings you extensively research-based crypto trends and analysis, usually unbiased. The first question, of course, is what is even Fed doing about inflation? Or maybe what Fed believes to be doing anything about inflation? Increasing interest rates, of course. But how does increasing interest rate curb inflation? So basically, before interest rate hikes, there was too much demand and less supply due to excessive money printing and COVID lockdowns. Now, the demand was rising because supply constraints have been larger and longer lasting than expected, resulting in price pressures being spread across a broad range of goods and services. So the whole idea of increasing interest rate is to make borrowing so expensive so that people are discouraged to lease houses, cars, etc., taking load off the production side of the economy. Now, not buying or leasing means less demand. Less demand means supply side can catch up, hence bringing the inflation down. Therefore, since the CPI data was higher than expected, the US Fed Reserve raised rates by 0.75% back in June. It's no surprise that base rates are now expected to reach their highest point in the US next year at 3.75% and in the UK at almost 3.5%. As long as inflation keeps going up, bond yields and the prices of stocks will stay low too. Furthermore, MSCI World Equity Index is down 11% for the quarter in pounds, bringing down the value of even the UK government by 10%. Now, Fed's hawkish stance is steaming up three possible scenarios. With this as background, I'm sure we only have, when I say we, I mean we crypto traders and investors, have three options for the rest of the year. Number one, Fed to lift rates by 75 basis points in July and 50 basis points in September. Number two, interest rates have gone up enough to a point, supporting the slowdown that central banks want actually, and inflation is starting to going down, hopefully. Number three, interest rates have gone up too far and a recession is coming, recession is imminent. So as for scenario one, Fed is supposed to lift rates by 75 basis points even in July and 50 in September. Now, according to polls that can be trusted, the Fed Reserve is likely to raise interest rates by another 75 basis points in July, followed by a half-point increase by September. At least until November, the Fed wouldn't make changes of less than a quarter percentage point. If you are new to my channel, let me remind you, back in June, the Fed increased the interest rate by 75 basis points and markets didn't react well at all. Putting in context of crypto market, June was the worst month ever in Bitcoin's history, where we saw a 40% decline in just 1 month, thanks to aggressive interest rate hikes. Now, this was the biggest increase in interest rates since 1994. Just a few days earlier, official data showed that inflation had increased even though everyone thought it reached its peak. In this scenario, expect volatility within few hours of Jerome Powell taking questions from the press, and then we shall see declines for another 1 to 2 weeks, taking us into the first week of August. In scenario number two, interest rates have gone up enough to a point to cause the slowdown that central banks actually want, and inflation is starting to calm down. How likely is inflation to keep surprising on the upside? I believe we have some room for optimism here. Few reasons that may contribute are: the first is that interest rate rises work with a lag, and so we are only likely to see the real impact in the next few months. Given pandemic had ended, people are more likely to enjoy services like visiting bars, restaurants, and holidays rather than purchasing goods. Now, this means some of the pressure on the production of goods had been lifted because people aren't buying products much, hence inflation should begin to calm down. Now, the second reason is that lease rates for cars have increased in line with higher interest rates, plus is the 30-year mortgage rate, which had more than doubled and is now over 6%. With a delay, this should calm down the house prices and investment and demand for cars. Collectively, this should all ease pressure on the manufacturing side of the economy, as I said earlier, and hence bringing down the inflation. Now, this scenario happening will be a huge relief for cryptos and overall markets. We can see huge positive investor sentiment returning into the crypto market. But the third scenario isn't something we would like to hear, yet it has quite a good probability of occurrence. In scenario three, interest rates have gone up too far and a recession is coming. Now, this is the worst case scenario, of course, and let's hope it does not in fact happen, yet it cannot be ignored either at all. There's an old joke: economists of the world have successfully predicted 9 out of the last 5 recessions. And this time, economists are predicting recession quite strongly. Now, if recession happens, which has high probability of happening anyways, risky assets, specifically cryptos, are last ones to attract investors' interest, because what is considered as best home for long-term investments are equities, and these would remain the highest returning asset class. Hence, equities would attract more investors' interest and certainly not the cryptocurrencies. Needless to say, this kind of market volatility is never enjoyable to go through, but it is part of the cost we have to pay to make sure investors capture all the longer term return that is on offer at a given point in time. If this scenario is executed, not just cryptos, but all the markets, excluding oil and energy, will see a bloodbath. I truly hope my content brought you some insights for you to further explore. Leave me a comment sharing your thoughts on my content. In particular, let me know which scenario has more probability of happening in your opinion. Thanks for watching, and I will see you in my next video.